Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be discussing our new hard drive disk delivery product and how you can get terabytes of options data delivered straight to your doorstep. Matt, do you want to share your screen and get us started?
Sure. Here are pictures of the actual discs here and our little ad. So on these three small discs that we actually are sending people is data every minute going back to 2015. Well, I should say 2 minutes from 2015 to 2020, and then from 2020 on every minute. So quite the large amount of data, if you could think about it this way. So here's SPX, and here's how we display this data that we are storing on the disks. So you have all the, so you have the option price that goes in there, and then you have what strike it is, what month it is, expiration, weeklies, etc. And then we have, all the different information, volume, open interest. So you see just the incremental volume. So, this is the volume at a certain time during the day. So it might be, for the 70, 75s, it's 7. And if it trades, it'll be 8. So it just increments up. So if you wanted to see how much traded in between, you just do a diff. The open interest won't change during the day. The open interest only updates once per the OCC. And that is, trades that are open contracts on that particular strike. We have a forecast of volatility that's based on forecasting all of the parameters of the skew. So we will take what we have at the forecast for the volatility for the next 20 days, the forecast of implied volatility of a 2-year at the money option, and then the slope in the short term, the slope in the long term, the derivative or the curvature of the slope. And if there's any earnings effect, we'll put that in. So that's what the forecast covers. Any questions so far, Tyler?
Yeah, no, that's great. So you can find all the definitions for what you get in each file on the website too. So if you guys want to follow along, we have a website where you can see all the definitions. Yeah, it's on the hard drive page.
Right. So historical data, hard drive delivery, and then all of the field definitions here. So ticker, trade date expiration, days to expiration, strike, stock price, call volume, open interest. So that's what we're talking about right now.
Yep.
And then the external vol can be any type of vol. We made this so it's, users could input their vol, but that actually is in this case is the forecast of volatility. That's what I'm explaining right now.
Great.
So should also mention for there's a spot price and there's also a stock price. So that confuses some people. So it will be different for indexes. So indexes have a spot price. So there's no actual price. There's only an estimated price for an index, cash index like SPX. So what they do is they'll add up all of the components of the SPX, and that's the spot right now. But what happens is there'll be expirations going out in time, and the implied, so there isn't a stock price for each expiration, but you'll notice that the calls and put parity don't line up. So we solve for that put call parity, and that's in the stock price column, and that will be close to the spot for 0 DTEs, 1 DTEs. But as you move away, the effects of dividends, which you don't actually get paid, and the effects of interest, which that you don't actually receive, are imputed in the implied futures price, and so that will be reflected in the stock price. You'll always see the spot price, but then you can compare as you go out. Is that clear enough, Tyler?
Yeah, I think so. It's still confusing to me sometimes, the whole thing, but it makes sense. There's also an FAQ on our website that answers this question, and you can also get more information from Otto. So if you ever need a refresher, like I do sometimes, you can just talk to Otto about it, and I'll explain it.
Yeah, definitely. That's the kind of one of the weirdest things in equity options, I think, is what happens with indexes, and since there's no real underlying, how does that work? European expiration versus American expiration, so it's quite
Yeah,
something to take in.
we get a lot of questions on AM PM expirations in the data set for SPX. Do you want to touch on that a little bit?
Yeah, go ahead if you got it.
I mean, I think there was in 2017 there was kind of a switchover. So post 2017, you're going to see SPXW in our data set and SPX, and the SPXW, that's the one that indicates AM versus PM.
Right. So what on the third Friday is the old, what used to be all of the expirations, but now they're weeklies and dailies. But so just to add more confusion, there are now 2 expirations on the same day. So today isn't to get into that, but we're just putting what we have, in the data set itself. It's quite something to, it's a huge data set. And Tyler, why don't you talk to the reason that we put it on hard drives versus what else are we delivering it?
Yeah. So we've been delivering intraday 1-minute history since August 2020, and we've been doing it through AWS S3, which is a file storage system on AWS where we can do a bucket to bucket transfer. So we have data on AWS and we'll transfer it to your bucket. The problem that we've been seeing, especially as the data set gets larger and larger, right now it's 20, 30, 40 terabytes, is that the egress fees are getting really egregious. So, nowadays there are thousands of dollars if you want to transfer the data out of your S3 bucket. So you'll get the data from us through S3, but if you want to transfer it to Google Cloud or to your own hard drive or to somewhere else, you're going to be spending basically the same amount of money just to transfer it out. And so, this is a problem some of our users have mentioned, and we wanted to give everybody an option to just order the hard drives themselves so that they wouldn't have to pay any egress fees.
Right. So now what'll happen is you'll order this. You'll say, do you want go to pricing? Do you want the 1 minute that goes back to 2020, or do you want to get all of it? That goes back to add for $1,000, you could get to 2015. And then the next decision is, do you want to keep the drives or do you want to send them back? Because the drives are quite expensive for all this data. It's 40 terabytes. So you could send them back and get refunded your deposit, or you could keep them and it's $1,000. So those are the decisions that need to be made, Tyler.
Yeah, I think this is a great option. We've already gotten some people buying it and people excited about it. So I think it's going to be great. You can return the drives or keep the drives. So I think that flexibility is great. We've had people interested in both options. So I think we really hit the nail on the head here, Matt, and I'm excited to see how this goes.
What about if you buy these and you want to get the data updated? What are the options for that?
Yeah, so you can you'll need to return the drives, and then we'll sort of upload more data to the drives and then just kind of ship them back to you. So there's kind of a recursive process there. I think we don't really talk about it here on the website, but I think that's our plan, right?
Yeah, but there's also, you could then get it through the S3. Like, so you could get the ongoing on S3, and it won't be as much to download it because it's
That's a good point.
not
Yeah.
as much data.
That's a good point. Yeah, ongoing data through S3 is probably the
Yeah.
way we want to encourage that. Yeah, I think also with the API is very flexible now. You can get 1 million hits per month, and you can query historical data. So that's enough for several symbols worth of intraday history back to 2020.
Right.
If you want to do it that way too. So
Yeah. Yeah. So there are a few different ways that you could do it. Once you buy the disks, there are a few ways to do it. What about the making sure all the data is there, Tyler? How do we do that?
yeah, so there's a checksum algorithm that you can run, sort of like a verification that you can run on the hard drives once you get them. There's instructions, they're called Readme files that ship with the drives, and you can also download them here on the website. And they have lots of information for verifying the data that you get, making sure everything's in there. And the READMEs also include some other information like column headers and definitions, and basically everything you'd need for the data locally. Even if you don't have access to a computer where you can look at the website here, it's the README files are on the drive too.
Yeah, let's talk about the README files for a moment. What do they contain, Tyler?
Yeah, the README files contain, there's kind of a lot on here. So there's examples of the data, an explanation of the structure of the data, column headers, and stuff like that, start and end times. There's also errata, so any errors that we've discovered along the way. You can download a full log of the errors that we've noted in the data set. And then, also obviously the instructions for the checksum. I think that's about it. It just kind of gets you familiarized with the data set and basically anything you need.
Yeah, it's quite something. This is a mass amount of data. We've saved it from our data provider, and we've run all of the SMV information on it, like I talked about before. So it has all of this marked up data. So I'll just talk about why this is different from other data sets. Firstly, in the SMV, the smooth market value system. So this is SPX, so it's a little bit hard. We could pick I'll just pick a non very liquid. So you could see these dots represent implied volatility. So some of these markets are extremely wide. So if you look at these markets, they might be, this is a good one, no bid at $2.15. If you wanted to, trade this put, how do you know, do you use the mid price? No, we have it worth 0 on that one. So, and how do we get that? Well, we draw this line through all the strikes. This is super important. This is something that I think brokerages should have, or they're not doing their fiduciary responsibility, because if someone is trading this and paying $1 for that, for example, it's crazy, right? So I mean, this one's offered at 32, so you should never pay more than 32 at a more in the money put. But still, you're not going to know. So so all of these options have both put and call, what we call the values, theoretical values for these that are based on smoothing. We also have a theoretical value based on a forecast. So, for example, no bid at $1 or at 215, our forecast is 0, our theoretical value is 0, so so that is worth nothing. at most pay the minimum tick on that one. So this is what really differentiates us, is the ability to draw this line. It might seem easy, but it's not. It's very difficult, especially when you get crazy implied, very wide markets like this one. Like, we also tell you what's our confidence in this. That's actually pretty high confidence, 80%. It goes from 0 to 1. And how wide's the market in volatility points? So you could see, if you think the volatility should be 30, well, the market is 4 vol points wide. That's extremely wide. So, I mean, here's one that's 1 vol point wide. So you can see it's a lot more rational, a lot tighter. So that one's, where we have some more confidence and it's tighter. So the confidence has to do with the number of volatilities that we can calculate and then draw a smooth skew through it. So that's how we come up with that data. So this is why ORATS data is so much better than just raw data, or because you could really then use those types of theoretical values, good volatility. Because what happens is, if you don't, for example, have a smoothing mechanism, right? You'll calculate a volatility, like the ask implied volatility is 0 at 153. So you might say, oh, well, it's 70. Well, it shouldn't be. We have it 39 vol. That's how we calculate. Then we calculate the theoretical values and the Greeks based on that. So you have to be very careful. This is one of the hardest things. I've been involved in options since the 80s, and a market maker, successful market maker, and then I backed people, had a firm, and this is all we worked on. So, and this is one of the most difficult things that I've done in my professional career, is to draw this orange line and to get these theoretical values. So this is all part of the download. It's all in the disks, and this is what makes our data so valuable, Tyler.
Yeah, no, I think it's incredible what ORATS has built with this smooth line and just the quality over this span of history. I mean, we have intraday data now 10 years back to 2015. So that's just an insane amount of historical data, obviously terabytes and terabytes, and you can use that to backtest various different events that have occurred since 2015. And so this is really giving retail traders and institutions really high quality, institutional quality data for that's very accessible, delivered at a low cost, and it allows you to backtest and get really good results out of what you're seeing here because of the quality of the data. Yeah, and you're right, it's very different than just raw data. You draw that smooth line and you get those prices, and that causes the downstream effect is we get really high quality Greeks and implied volatilities, and from those Greeks and implied volatilities you can have better back tests and better risk analysis and sort of these second and third order effects of what we've done here with the smoothed curve.
Right. And we don't we do cleaning, meaning we don't let those extremely wide markets affect negatively what we're doing here. So that's important. You mentioned something interesting, back testing, and then now you could back test each minute or intraday every hour or whatever. We have, if you click on that, we have a macro calendar. So you could test, for example, at 10 o'clock, the non-manufacturing business activity and employment and PMI are coming out. So you could go back and find out what effects that was on the minute after it was announced. So there's a lot of, there's a ton of things now that you could kind of form your trading niche on with this data. So in order to compete with the big boys, you gotta really be an expert in one facet of trading, and this data could really give you that. So it could allow you to look at events that happen intraday now, and you have very good Greeks, good volatilities. So you could really find your niche using this data, Tyler.
Yeah, I'm really excited for what this does for the retail trader. And a lot of people these days feel swamped with how much information there is in the market, and this is really exciting because it allows you to sort of dive deep into, like you said, that niche. If you want to look at the macro events, that's a niche.
Yeah. Yeah, so I mean, I think we could wrap here, Tyler. I mean, go to ORATS.com, search for historical data, go to the hard drive delivery, and you'll see the pricing there. Very easy. We get your address, and then we send it to you. So, it's verified. Read the readmes, and get on it and go from there.
Yeah, definitely. The readmes are important. They kind of give you everything that you'll need to know about the drives. And yeah, I think that's a wrap, Matt. Yeah, we're looking forward to seeing how you guys use this data. And if you guys have any questions, just ask Otto in the top right corner of the website. You can also email support@orats.com. But we're excited about this new disk delivery product and see how you guys can use it. Thank you, Trader, for hosting us, and we'll be back again next week.
Thanks,
Matt.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.